What is managerial accounting? Well, to start with, accounting by its very nature is keeping track of things. Most of our concept of accounting comes from keeping track of transactions that happen with regard to a company and external constituents. Managerial accounting is a specific focus on the internal happenings of the organization. It is the use of all the information that is relevant to the organization combined for purposes that is useful or has some utility within the organization. If you were to compare it to financial accounting, which is generally focused on external reporting in accordance with industry standards, generally the General Accepted Accounting Principles or GAAP, managerial accounting is a little different. It seeks to identify, analyze, measure, and interpret accounting information for internal use. So it's completely internal looking. Now, with that being said, what do you do with this information? Well, the purpose of it is the controlling function and the planning function. Managers use it to make decisions. They also use it as metrics to determine how operations went so that they can, again, make the necessary changes again in the planning phase so that the organization can continue to function efficiently and hopefully make a profit. Now, what are the things that generally managerial accountants look at? Cash flows, that's huge. Transactions, whatever the nature, the ultimate effect of it, valuation, those types of things. Costs, right? And then internal rate of return, or just a rate of return on any project undertaken. So these are the primary things that they look at. Now, what does a managerial accountant do? Well, they prepare financial data, okay, from the transactions identified. They evaluate and manage risks related to any ongoing project. They analyze cost and they attribute cost and revenues to the accountability or the responsibility centers that exist, particularly those that have their own functioning output that require resources. That is, they utilize resources, but they also bring in resources into the organization. They report and analyze cost data for future budgeting decisions, and then they analyze investment opportunities to make certain, one, that an investment is profitable to the organization, but also to compare potential investment opportunities with each other so that the organization chooses the best opportunity. So all this together goes into the bailiwick of what is managerial accounting.